And if you look at the average retiree today, they're fucked. Look, Jamie is clearly talking down the asset so that his friends can buy it. Understand, because it happens every single year, is Chinese New Year. Every single day for the foreseeable future, a couple $100 million, $200, $300, $400 million of Bitcoin are going into cold storage, and they're not coming out. And that supply dynamic is just not understood right now. Everybody's like, oh, the ETF was such a failure. Like, what are you talking about? On every measure, it was a wild success.
In this thought-provoking video, Mark Yusko takes a deep dive into the trends shaping Bitcoin's journey, offering a critical analysis of why the anticipated moonshot hasn't materialized after the Bitcoin ETF approval despite consistent daily inflows. Mark unveils two major reasons why Bitcoin prices have not experienced the rapid ascent that many traders and the crypto market envisioned. Mark also evaluates the intriguing parallels between Bitcoin and gold, highlighting the historical context of gold's evolution from $33 an ounce in 1933 to over $2,000 an ounce today. By likening Bitcoin to digital gold, Mark emphasizes the potential for significant growth, especially considering that Bitcoin has only been in existence for 15 years yet has already established itself as one of the world's premier assets. The question now is, what would Bitcoin price look like in another 90 years? Your guess is as good as mine. Bitcoin is a digital currency with potential longevity and value appreciation. Mark Yusko's insights provide a unique perspective on the current state of Bitcoin and the factors influencing its price dynamics. Also, guys, only a small percentage of my viewers actually subscribe. If you enjoy staying up to date with finance content, consider subscribing or liking the video. Let's get into the video as Mark provides clarity and the reasons for the bearish move in Bitcoin coupled with GBTC outflows.
On every measure, on trading volume, on inflows, today I think it's like the fifth highest daily inflow of all of them, including the big dogs like Triple Q and VOO. So it's just silly. But it was like, but the price fell. Like, yep, that's what happens when, and we talked a little bit about this, probably didn't talk enough about it. There was a whole bunch of front running. And then we probably all underestimated the outflows from GBTC.
How long do you think the overhang of the GBTC outflows are going to be with us?
A couple weeks. I mean, pick a number. I mean, that like 85% of statistics is made up on the spot. I mean, I haven't done the exact math, but there's a whole bunch of holders that bought GBTC when the price was 10, 15, K. They're not selling. Irregardless of what the fee is, you can charge them 10%. They're not going to sell because you're not going to take a tax hit and pay a huge amount of those gains away just to save, 1% or 120 basis points. And clearly that's what Grayscale was banking on. Now, all the money in the tax exempt accounts, IRAs, retirement accounts, that's going. And, by most estimates that I've seen, that's about 15, 20%. I don't think anybody knows exactly of their assets. And I think what people just don't appreciate, I don't think they appreciate, is, Grayscale, yes, it was $25 billion
yep.
of AUM, but they didn't raise $25 billion. I don't know the exact number, but my gut is it's around 10-ish billion. That big first move from 10 to 60 before the famous Elon quote, most of that was GBTC, right? You had, $6-8 billion coming into a market that was still, reeling from the previous bear market before the last bear market. And, somebody was going after Eric on Twitter yesterday saying, your numbers are wrong. I've never seen a $3 billion inflow without, prices mooning. He said, well, he said, Holmes, the numbers are right. So yeah, you're just missing a variable. And that variable that this person is not paying attention to is the sales. And the other thing that people aren't talking about, and I don't understand because it happens every single year, is Chinese New Year. Chinese New Year is coming and they got to fill the red envelopes with cash. So they sell Bitcoin. And this year, the sales are going to be worse than a normal year because you had big gains. And then we're going to have another one in, late March, early April, where people are going to have to sell to pay Uncle Sam. The good news, like my socks, the penguins are going to be out there snatching it all up and stuffing it away at Coinbase. And, the amount of money that's going to be made, both in fees and transactions, is going to be really good for these companies. And I think people are just lost in the weeds for some reason. And I mean, it's our own fault, community-wise. I actually uttered the word God candle just like everybody else. And that was, clearly not smart because my 30 billion number was never a day one number, right? 30 billion is 0.1% of the 30 trillion. That was never a day one number. That was over time. And I will say, I did not believe, and I still kind of don't believe it, that three of the largest groups that I'm counting on all accepting this, finally, and saying, yes, we're going to put it in the models, Merrill Lynch, UBS, and Vanguard, basically got a call from Ms. Warren. Like, well, you can't say that for sure. Like, well, I can say whatever I want. I'm boisterous, remember? So I can say that, and I believe that's what happened. Look, Jamie is clearly talking down the asset so that his friends can buy it. They are going to do stuff to try to, tamp it down so they can accumulate at a lower price. The second thing, and this, I said this last year, every year at Davos, Jamie gets on TV, right? He's one of the most powerful people in the world. You don't have to like him. People say, oh, he's an idiot. He's not an idiot. Trust me, he's not an idiot. He's a really smart man. And no, it's just so bad. It's just, he's
a very competent operator. I mean, one of the most.
He's one of the most powerful people in the world. You don't have to like him, but he is one of the most powerful people in the world. He runs the second or third largest bank in the world. And he has 10 minutes on CNBC. He can talk about anything he wants. He can talk about climate scam. He can talk about, what they had for lunch at the private room with the sheikhs. He can talk about anything. He's talking about Bitcoin. That is not a bad thing. The thing I love about Jack Bogle quotes is that everyone attributes them to this kind, gentlemanly grandpa who was perfectly pure intentioned and he's just trying to help. He's richer than everybody else that invests in his company. Why is that? He played the game perfectly. He paid the government a lot of money so that he could be one of two primary providers of passive strategies. They got a law passed in 1986, the Tax Act of 1986, that changed the way corporations did their pensions. They went from defined benefit, where you knew what you were going to get, to defined contribution. There were two things that did. One, it cut the cost to corporations by 30%. They could put in 30% less of their profits every year into the pension. So they all voted for it and lobbied for it. And Jack got a constant stream of flows where he could charge, just a little bit. I don't charge very much. I just charge a little bit on a big shit ton of money. And he got super rich. And if you look at the average retiree today, they're fucked. They don't have enough. They have not compounded at a high enough rate. But, it's so great because I'm paying low fees. You've been scammed. They have been scammed. So to say commodities have no value, really. Okay, price of gold in 1933 was $33. Today, an ounce of gold is $2,000. That's a return. In fact, that's as good a return as any other asset that you think is so great. And it's better than the fixed income returns that everybody talks about, because those have been devalued by currency devaluation. So again, if you're at the tippy top in the all-seeing eye, you love this shit. But the average person is getting a raw deal. So God rest his soul, everybody loves him. And they're probably going to get, lots of comments that Yusko, you suck for picking on Bogle. It's classified as a commodity, right? It is a commodity. And Bitcoin in particular, it is digital gold, right? It is this store of value that's more divisible and more portable. So it has all the scarcity of gold, but it's better. And I meant to tweet this, but I just got lazy and I didn't go find the pictures. But, there's an interesting thing about Bitcoin that traditional commodities don't have. And there was and what I was inspired by is after JP Morgan, after Jamie was talking, someone tweeted the picture of, hey, Jamie, at least Bitcoin's verifiable, because there was a story that JP Morgan bought a bunch of nickel, right? The mineral. And it was in a warehouse, and literally they opened the bags. It was full of rocks. It wasn't nickel. And so I wanted to get a picture of a vault full of gold and a vault that was empty, because no one actually knows if all the gold is in Fort Knox. There are lots of rumors that it got taken out years ago, and you can't verify that it's there. With Bitcoin, you can verify on chain how much a central bank has or how much JP Morgan has. That's not true with physical commodities. They have to be independently. And this is the whole issue of tokenizing assets. The big challenge is you can tokenize my house, but someone's got to check that it didn't burn down. Is what defines success in the world. If you live in a jurisdiction that does not have well-established and enforced property rights, it's horrible.
Yeah.
Horrible.
Well,
Bitcoin's rock-solid property rights for holders stem from its crypto-programmatic nature. Based on this, it is improbable in any foreseeable future for governments to acquire Bitcoin unless they aim to seize control of all the world's computers, which we know is not feasible. This characteristic is a key factor that contributes to Bitcoin's appeal as an asset class with future value. Governments often acquire valuable land in strategic locations. For example, the government of New York would never consider selling Central Park due to its current value and foreseeable value. They would prefer to retain ownership, similar to the way Bitcoin holders maintain control, ensuring the cryptocurrency's sustained value over time. Let's consider Mark's perspective on property rights.
Even common law, right? Even UK British common law, all the colonization, and okay, that was bad, very bad. But it did leave a legacy of good law and good property rights. And look, government can still, through coercion and violence, mandate, right? They can say things like, force majeure or eminent domain. Yours is mine now. And most reasonable democracies / republics don't do that very often. But there are plenty of places that do. And can't do it in a cryptographically secure ledger that can't, everybody's like, well, they're just going to ban it. Like, how? You're going to turn off every computer in the world simultaneously? I mean, every node in the world, not every computer, but every node that's connected to the network, it's not happening.